Hello everyone, this is Moshe the Electric Israeli and thank you for joining my channel. If you are new, please subscribe and help me change the world one electric car at a time. Thank you to all of my patrons, your support is awesome. And those who order their Tesla using my link, thank you so much. There's only a couple days left until the end of Q2 where you can get the full advantage of the $3,750 federal tax incentive and also free Tesla supercharging miles. Today we're going to talk about an interview that I saw with Tasha Keeney from Ark Investment. Ark Investment is the biggest bull of Tesla. They are so high on Tesla, and they mark Tesla as a $4,000 to $6,000 stock. We'll see about that, I don't know. But she laid out a very simple but very interesting vision of Tesla in particular, but EVs in general. And she's talking about a 2 trillion market access for EVs coming before you know it. People are asleep at the wheel, she says.
Yeah, so, to start, we think the autonomous driving market is going to be a huge opportunity. We think this should be valued at $2 trillion today in the equity markets, and it's virtually unaccounted for. We think Tesla has a great lead there, and that's because of the data advantage that they have. They're the only automaker collecting data from customer cars. They use that to train their machine learning algorithms. And we think that's what's really going to pay off in solving for those last few percentage points to autonomy. Now, you're absolutely right that often people focus on the short term, the production, delivery figures, and there's this idea that Tesla has a demand problem for electric vehicles. Well, we also think that the electric vehicle market will surprise to the upside. We think there'll be 26 million EVs sold by 2023. And we think that many forecasts aren't accounting for that because we've actually done the work on the battery cost declines for the batteries that go into these vehicles. And that change in sticker price is what we think is going to drive demand.
And the $2 trillion market, she based it on not unnecessarily car production. Obviously, how do you judge any company that you want to invest? Potential, sales, margins, things like that. These can be measurable. So Tesla, until a couple years ago, was measured on what it will be. The Tesla Model 3 was the vision. Now it's the Model Y, the truck, and all that. Now Tesla is judged by sales, monthly, quarterly, annual sales, and that's how you would judge a car company, right? Or their market share. So she said, you got that wrong. The Tesla sales of vehicles, of car productions and delivery is just a Trojan horse. That's how she characterized it. It's a Trojan horse.
And it just 26 million cumulatively by that point, or per year?
That is the global EVs sold in 2023, yes.
Got it, okay. Now, do you think that it is Tesla's own objective here and strategy that these vehicles right now that they're trying to sell for between $35,000 and $70,000 or $90,000 are just a Trojan horse to get them into pole position for autonomous driving?
Absolutely. I mean, we saw with the release of the standard version of the Model 3 that if you lease a Model 3, Tesla actually doesn't allow you to buy that car after the lease. And we think that's because they want to seed their autonomous vehicle market. And in fact, they've said that. They've been talking about launching the Tesla network for some time, their version of Uber. And we might even see them launch ride-hailing just to sort of test out the kinks in the system before they reach full autonomy. So that could even happen in the next, say, year or so if they want to do that ahead of time. And we think that's what they should do.
It's a Trojan horse for what Tesla is all about. And to her, what Tesla is all about is the technology and the autonomy and the full self-driving and leveraging Tesla fleet by whether it's by Tesla owners like I am or by Tesla fleet that they're going to create. They are creating as a future fleet for ride-sharing, autonomous vehicle, and what the future that she sees it's going to come. That's why, for example, if you decide to lease a Tesla car, you are not going to be able to buy it after the lease. Every car company allows you to buy it, and every car company wants you to buy it. I mean, what's it going to do with it? But not Tesla. They're not going to let you do that, because their idea is the Tesla fleet. So what else does she say? So
in this world of full autonomy, where are the economics going to be? Where are they going to accrue most? Is it just going to be software? Is it going to be the maker of the vehicles, or some other operator of a network? And where do Uber and Lyft fit into that?
Yeah, that's a great question. So we think that most of the economics will go to the platform provider. So these are really the companies that own the full technology stack, the companies that are actually making the car autonomous, that have that software advantage, and will get those nice software-like margins. So Tesla sits nicely in that place. They're also a vehicle producer. We think that other auto companies with successful EV platforms will still have a role here, but they'll have to partner with technology companies. And Uber and Lyft could potentially have a role as well, but again, it would have to be through partnership with a technology company that could actually provide that autonomy, because it doesn't seem like Uber and Lyft right now have credible autonomous driving programs in-house today. Now, when they do that, they won't enjoy the same economics that they get as ride-hailing firms. Right now, they take a 20+% cut of gross revenue. We think that's going to be in the low percentage points in sort of that future picture, where they're really just a partner for the platform provider.
Okay, obviously, not the sales are important. That's the Trojan horse. The autonomy is what it's all about. The cost for producing batteries. I did like really good research, and just to give you the main number, not to bore you, a kilowatt-hour battery in 2010 cost $1,000. $1,000 per kilowatt-hour battery to produce. Okay, today is average $180 per kilowatt-hour. Tesla battery costs $190. GM costs $205. When production of a kilowatt-hour battery will hit $150, it will be equivalent to what it's costing you to produce a gasoline car. So the prices are going to be significantly reduced. She talks about the federal tax exemption, and Tesla is losing it a couple of days from now, this round, and then at the end of the year, it's going to be all gone altogether. But she talks about the natural progression of reduction of the battery cost, and in 2030, kilowatt-hour battery will be between $30 and $50. I am going to do a massive battery, not necessarily the chemistry, even though I'm going to talk about that, but how it's going to be evolving to be reduced for this much. Now, we've seen it went down from $1,000 to $180 average, and it's going to go to $150, and eventually it's going to go to the teens, $30, $50, $65, $70 at the max. And that's going to make electric cars so inexpensive, not only equivalent to gasoline cars, but their superiority in terms of performance and all those things are going to make them, what she said, that will be the $2 trillion market. That will be the $2 trillion market. Not necessarily if it's going to be federal tax incentives or not. Those will be irrelevant. She talks about cost of ownership. I mean, I'm driving a Tesla Model 3. The cost of ownership is minuscule. When I owned the Nissan Leaf, I spent maybe $300 throughout my 3.5 years of ownership. It was nothing to maintain. So in the long run, that was what people are going to realize. So then she talks about the brilliance of Tesla is not necessarily the cars, which are brilliant, of course, but the brilliance of Tesla is more the platform that's going to provide for autonomous. So future cars, it's not who is producing the car, it's who is owning the platform. Okay, Uber and Lyft have a platform. The cars is your car, my car, anybody's car could use that platform to leverage leverage the technology and leverage the car to mobilize people and to make money both for the owner and for the platform owner, which will be eventually Tesla, like Lyft, like Uber, and all that. So she talks about like worst case scenario and best case scenario.
Yeah, so actually in our bear case, we're assuming that Tesla doesn't get to full autonomy at all. So I guess that's what you could assume on the downside. And if that happens, again, because we think electric vehicles on their own will be a huge market, we actually think the stock could go to 500 to 600 in the next 5 years. And we're also assuming an equity raise with that. We'd be okay with Tesla raising more capital in order to scale production and maintain their leadership in this field. And that's we really think they're years ahead of the competition today on battery production alone. So we just want them to get as much market share as possible, get as many cars on the road as possible.
And just finally, let's say that 2023 electric vehicle projection of 26 million global sales. What would you assume as Tesla's market share of that?
Yeah, so our bear case has them losing a third of their market share today in EVs, and our bear case has them losing 2/3 of their market share today, and our bull case has them losing 1/3. So they'd be say in the teens or at 11% of the market in both of their scenarios. So we actually are assuming that they lose share, but again, it's because the EV market is going to be much larger than we think most people will expect.
She's talking about the worst case scenario is Tesla has no autonomy. It's not successful, it's a failure, it's illegal. People talk about that being maybe what happened if it's illegal. It's going to be illegal. So she talks about if that is the case, failure or illegal, she talks about a Tesla stock getting to $500, maybe not to $4,000, just because of the cost of ownership and all the things that we just talked about. But if Tesla and autonomy is successful, and it is a $2 trillion industry, and everybody's in the pool, still, if a worst case scenario, if Tesla loses 2/3 of the market share, even if Tesla loses 2/3 of the market share, because everybody is now in electric cars and everybody is in autonomy and everybody's doing what she's talking about, still Tesla is going to be so successful because their data collection and their advance and the years ahead of that they have advantage over everybody else. And best case scenario, that's when we talk about the Tesla stock getting to $4,000 or more, if Tesla loses only 1/3 of the market share and Tesla gets to dominate 2/3 of the future future share of electric cars. We're talking about 26 million cars annually. She's talking about 26 million cars annually around the world in just a few years. Maybe 2023, 2024, that this will be the amount of electric cars that are going to be produced and sold around the world. And if Tesla captures a third of it, or a half or two-thirds of it, that's what it's all about. So that's the idea of the car being the Trojan horse. It's just the vehicle, the technology, the platform behind it. It's what it's all about. So I hope I made it clear. It's very interesting. I would love to hear your thought and reaction about that. Thank you for watching, guys. See you tomorrow in another video.